Hey guys, how are you? Andy Sukhu, founder and CEO of Y2K Credit Solutions. So today I have an important topic I want to talk to you guys about. It's a very wide topic, it's a very important topic. And the topic is about business credit and forming a company. And what does that mean? How does it work? So to the left of me, I brought in our in-house counselor, Michael James. And he works at Y2K Credit Solutions, and he specializes in creating companies, registering a company, tax IDs, forming business credit. So today, him and I are going to talk about it, and let's get into it. Mike, say hi to the audience, the Y2K audience. Yeah. So listen, every day I get a call, Mike, and I tell you about this every day. Everyone calls me, hey, I have a business. I'm an entrepreneur. Okay, no problem. What is your business about? I don't know. I haven't started up. I just registered the name, and I have a tax ID.
Yeah.
And I get that maybe 7 to 10 times a day. And when you tell me that you don't have a business, that's just one spec of setting up a business, right? So, today I want to talk about what it is to set up a business, what it means to be the entrepreneur of the business, how you formate the business, what different entities there is, like LLCs, S Corps. So I want to break that down. Yeah. So I think the first thing we should talk about is step one, when you're starting a business. And correct me if I'm wrong, and I've been in the business long enough that personal credit drives business credit when you're starting a business, because the business has no credit, no identity, nothing. So you need your personal credit to back the business while you're building the business credit. But I think there's a lot of confusion with people when they just have a tax ID and a name and they think they have a business, and that's not true at all.
Yeah.
So let's break it down for them, what it is to have a business, what's the steps to starting it, creating it, and we'll take it from there, because it's a wide topic and a lot of people need to know about it.
Yeah, and that's such a common problem, a common question of what do I have?
Right,
after
correct.
I've done it, do I have the right foundation?
Correct.
That's what I call it. Do I have the right foundation to get business credit?
Correct.
So, what people usually have when they register that name and they have that EIN number, they usually have a sole proprietorship. 9 times out of 10, they'll have a sole proprietorship. And what that is they go to the courthouse, they register a DBA saying, I'm doing business as, John Hancock, and I sell T-shirts, so John Hancock T-shirts. Okay. And you are registered as a business, you're doing business as John Hancock T-shirts, you have an EIN number, but as far as your foundation for business credit, you may be missing the mark. Okay. So,
well, let me ask you something. So, when you're starting a business, first step is you come up with the name, you register with the state, you get the EIN, which is a tax ID, right?
Right.
EIN, guys, is tax ID, just so you know, it's the same thing.
Same thing.
2 different words, same thing.
That's a good point, because terminology is very important.
Yes,
in
that's
the
true.
process. But
that's very important. So you register the company, you get the tax ID. What happens after that to try to get the business legitimate? I know when it comes to the business credit, you have to be registered with Dun & Bradstreet, Equifax, and Experian. But forming a company, I know some state like New York, when you start a company, you have to register, be published in the newspaper to become a legitimate business. And I know the states are different. So what is there like a 10-step process to formatting a full business just to get the foundation set?
Yeah, so the first thing you would want to do is figure out which one of the entities or structures you want to choose.
Okay, so that's important, because there's like LLCs, there's Corp, there's S Corps.
Yes.
Can you break down the difference between those?
Yes. So you have an LLC, which is a limited liability company. It's a hybrid. We like to call it the hybrid between a corporation and a sole proprietorship. The importance of most of these structures, I'll point out, is that it protects you from liability. Now, how does it protect you from liability?
Good point.
It separates your personal assets from the business assets.
Okay.
And that's why you're picking and choosing what structure makes sense for you. Now,
no, but let me ask something.
Yeah.
Stop right there for a second. Now, when you're choosing the entity, LLC, Corp, do you need, I guess you have to understand what your business is going to be doing, or what kind of services or goods they'll be selling in order to pick which liability fits.
Yes.
So LLC is limited liability company, but when you say sole proprietorship, what is that? Can you break that down?
Absolutely. Good question, because sole proprietorship does not give you any type of liability protection. Okay. So you are one and the same with the company. Okay. So if you signed a contract or a lease, for instance, under your DBA, your sole proprietorship, they could come after your personal assets, your home, your car, your bank account. They come after your personal assets to satisfy a business judgment.
Okay. So say that one more time again. I think that was a good point. That's a very good point.
So when you're a sole proprietorship, you are the business. Okay. Essentially, you're the one and the same. So if you go out and have a business contract that goes bad, a relationship that goes sour, and you owe them money, they can come after your personal assets to now satisfy that business judgment.
Okay.
Right, lawsuit, whatever the case may be. So there's no protection. There's no liability protection with a sole proprietorship.
Now, if you do an LLC, S corp, or whatever you do, can you also have a DBA in each of those entities?
Great question. You can.
I didn't know that. That's good. I didn't know that.
You can. So a lot of right. So and that's where the confusion comes in as to I have a DBA. So you may think, some people may think, oh, I have I'm registered, and a DBA can you can have that for any type of entity.
Okay.
Partnerships, the 4 entities: partnerships, LLCs, corporations, and then
S corp?
sole proprietorship.
Okay.
So S corp is a form of a corporation.
Okay.
So you can have a C corp.
Okay.
And you can have an S corp.
Okay.
And the benefit of this hybrid LLC, and I know I may be jumping around a little bit.
No, it's fine. It's fine.
The benefit of the LLC is that you can be taxed as any one of these entities. So you can be taxed as a partnership, you can be taxed as an S corp, a C corp, or you can be taxed as a sole proprietorship, where it just goes to your personal tax returns. So that's a big foundational issue that in consideration that needs to be made when you're picking and choosing that structure.
All right. So we got the entity part down. I think everyone needs to know that. But I want to jump back a little bit to the beginning.
Yeah.
So you register the name of the
Yeah.
company. You got the tax ID.
Mm-hmm.
Depending on the state, you have to go register in the courthouse or a newspaper
Right.
to be published as a legitimate business in that, is it town or county or state?
Yeah, it's actually the county.
Okay,
So
the county.
with an LLC specifically. So LLC and a sole proprietorship. A sole proprietorship gets registered with the county clerk. So if you're going to be doing business in Queens, if you're going to be doing business in Nassau, you go to that specific clerk.
Gotcha.
And if you want to do business in a couple of counties, you'd have to go to each county.
Okay.
Now, with the LLC, it is by county as well.
Okay.
It's where you're basing your business.
Where your office is
Yeah,
at.
where you'll be basing your business in. So if you're going to be doing business in Nassau County, Queens, you have to publish in that county as well.
Okay.
And that gets filed with the state.
So like, let's say I decided to do business in Bronx, and I'm gonna have an office in the Bronx. I have to be published in that county as well as doing business there to be recognized. Is that correct?
Yes.
Okay.
Well, so with the LLC, you would register with the state
Okay.
at large.
Okay.
But then publish in that particular county. With the sole proprietorship,
Okay.
you just register with that county, and you don't have to publish anything with sole proprietorship. You just register in that county.
Okay. So now we have the tax ID, we have the name registered, we have you published.
Yeah.
You open a bank account, a business bank account.
Yes.
What other steps was there to, like, I guess just to get the business legitimate, like a legitimate business? What else?
So most people are, when you go through this formation process, what you're going to look to do is get your LLC, or if it's an LLC, let's just take an LLC. When you're going to pick the name, make sure it's available.
That's true.
Make sure it's available. And this is another consideration, if depending on the type of business you're doing and the name you pick, DBA or otherwise, you may want to check nationally whether or not that name is available, because you may want your business to be a national business.
Right.
And then you run into problems later on when you have a business and you're competing with someone else that has the same business with you in the same space.
Gotcha.
So and then you have to change.
Okay.
So, but you pick the name, make sure it's available. We register, publish if it's an LLC, and then you also get your EIN from the IRS. That's
Gotcha.
federal government.
Okay.
And then you would get something called. Also register with the New York Tax and Finance Department.
Okay.
That's because you have to pay state taxes and federal taxes.
Okay.
So those two tax departments are going to be tracing your income and liabilities.
Okay. Perfect. So now that we have the foundation set up, we have the bank account set up, we've registered your legitimate business now. Now everyone wants to build business credit.
Yeah.
How do I build business credit? Where do I get funding from? And this is the big misconception, and this is where I need to clear it up with people, that when you have a business, you have to treat it as a business.
Right.
You can't treat it as your personal spending. The bank account cannot be personal. You can't tie it together. It has to be separate. The reason why, when you want to build business credit, you want to get lines of credit. First off, to have business credit, you have to have personal credit. I said that in the beginning. Personal credit has to be built and in good standing, because you're going to PG, personal guarantee, everything until the business can stand alone on the tax side, right? So now you make sure there's 3 bureaus in the business world. There's Dun & Bradstreet, Equifax, and Experian. These are the 3 credit bureaus that governs business credit and get credit scores for you, for your business. Now, it takes 6 months to build business credit, just so you guys know that. And it needs trade lines. Trade lines are like Quills and all these companies that are going to give you loans, lines of credit that you can use every month and pay on time. That's how the score gets to be built. But the thing is, everyone wants to know, how do I get loans from the bank? Well, as you're doing business and you're making profit, you're supposed to create a profit and loss statement. And I think we need to break down what profit and loss statement is.
Yeah, and so I'm going to take a step back.
Okay.
Because when you're the foundation of your business is everything. And so while we have the entities, while you're choosing the entities, you also want to choose your team. I would say that the most important team is your accountant.
Right, correct.
And a person like Andy who could coach you through credit, and your attorney.
Your attorney, yes.
Those 3, your CPA, your attorney, and someone who's coaching your business credit, are essential to your business. So to your point, you want to make sure your structure is set up in a way that you can apply to, when you apply to these banks, that you're set up and structured correctly. So a profit and loss talks about how much money you've made,
Correct.
and how much money you spent to make that money. How much money, marketing costs, office expenses, all of these things. Those are done. Well, you have a yearly profit and loss. You can do it by quarter, obviously.
Right.
But those things that document is incredibly important to you submitting and it's showing that you're making a revenue.
Correct. So, and then I want to talk about that a little bit, because there's a difference between credit cards on the business and loans from the bank. There's 2 different processes.
Right.
And a lot of people confuse that. So credit cards, once you have the credit built, there's 3 scores in the 3 bureaus, and they're all speaking the same language. I want to say speaking the same language. I mean, they're all reading the same data that's on the report.
Yeah.
So Equifax is seeing what Experian has, Experian is seeing what Equifax have, Dun & Bradstreet is seeing what all 3 is having. They're all co-mingled together, so they're seeing that. So now the score should be the same. And in business credit, score goes from 0 to 100. Not like personal credit where it's 400 to 850. It's 0 to 100, and obviously 80, 90s is equivalent to 750, 850 in human credit, right? So now, once you have the trade line built and you have a score, then you can apply for credit cards under the business, and you're not PGing anything. Because the business credit has a score, and it's a high score. Just like personal credit, you have a high score, banks will give you credit cards. Right? So you get credit cards there. But now you want loans, and what James is saying with the profit and loss statement, as your company make money, you have expense to run the company, but you also want to show profit, and you want to pay tax on that profit, because, correct me if I'm wrong again, if the banks don't see that you're making a profit in your business, how are they going to loan you a loan of X amount? How are you going to pay it back if you're not making a profit? And I think a lot of people, they want to start a business, they have the idea, they have the vision, but they don't execute it the right way. And they start off, they get the tax ID, the name of the article of organization, and I think that's it. And that's one aspect, like one, I don't know how you say it. It's very minimal.
And to your, while we're on the topic of two things, like the PG, personal guaranteeing, and the profit and loss, I want to mention, just back up with the personal guarantee and say, the personal guarantee is going to come about from your structure, your LLC, because you're separate. So a personal guarantee is a normal person guaranteeing a loan for a business, and so that's where the separation comes. That's where that concept comes in, that you're personal guaranteeing something. It's a very important concept. Once you structure it the right way, that term will become very familiar to you about what you're personally guaranteeing.
But let me touch on personal guarantee one more thing. I want to add something to that you said. With personal guarantee, it's temporary. Realistically, as the business grows and it makes profit and you're paying taxes, you don't want a personal guarantee anything. You want everything to stay on the business side.
Absolutely.
Yeah. You want to separate everything. And your personal stays personally. And I tell you for one reason why. On your personal, if you're PG and everything, it chews up your debt to income ratio.
Absolutely.
Because whatever you have in the business is tied into your personal, and it's showing that you have more debt. Now you want to get a loan, you want to get a home, you want to buy a car. That debt can actually affect you and get you denied from getting.
I have a question about that.
Okay.
So when you have business credit, you're saying that doesn't affect, there comes a point in time where it doesn't affect your personal,
because you're not PG in it anymore.
Right.
And now everything is sitting on the business alone. Realistically, you could bankrupt a business, start up another business. It doesn't affect you personally. But when you're PG and everything, you got to file bankruptcy on your personal name.
Right.
It affects you.
So if you were a sole proprietor with no liability protection
Right.
and you went bankrupt, you can lose your house and car.
Oh, I didn't know that.
Yeah.
Okay.
So I'm tying it together.
Oh, okay,
yeah,
okay. I see.
You see what I'm
Another
saying?
point. I didn't know that.
Yeah.
Okay, perfect. So once you get the business up and running, once you have the profit and loss, then you can go into the bank.
Right.
Then you can apply for a loan, and then you can start leveraging things like PPP because obviously you have payroll
right.
and all these things,
Absolutely.
all these loans, that the SBA loans and all this stuff that's coming along down the lines. But this topic is very important because everyone just shouts out, "I'm an entrepreneur. I have a business." And when you get into the conversation, you ask them like, "What do you have? What is your business?" I'm thinking about starting a trucking company.
Yeah.
So you don't have a business yet, right? And I wanted to clear that up because that's something I get every single day, and I'm glad you're able to come on and talk with me about how to set it up. And guys, James sits in our office here. James, can we do stuff in different states? Can we do registration in different states?
Yeah,
okay,
absolutely.
So guys, if you want to get your business structure set up correctly, registered, get the steps, James is in our office. You can give us a call, 516-568-4541, set up an appointment with him. Or you can call him directly. What's your number?
516-858-5887.
Call him directly. I mean, the video could be long. We can go on and talk about a lot of things. But I just wanted to give you guys the main points. And, there's people in our office that can advise you and coach you on what to do and help you set it up the right way. Give us a call. Like I said, James is here. This video is going to be on our YouTube channel. So make sure you check it out. Like it, share it, connect. All right. So to you guys.
All right.